Welcome back. It's time now to take a look at the top business stories. Emirates NBD maintains #1 spot for largest Arab bank. UAE gold exports boost total non-oil trade in 2010. And Australia unveils carbon tax scheme. Let's first look at the UAE stock markets. Both the DFM and ADX were up. The DFM was up 0.6% today to close at 1,567 points. Developer Arab Tech Holding was among the top performers with a plus of 3%. Dia Development rose 1.4% and Drake & Skull International 0.2%. Commercial Bank of Dubai was up 1% and Dubai Islamic Insurance 0.8%. Largest loser was insurer Takaful House with a minus of 3.7%. 58 million shares were traded, valued at 68 million dirhams. And over in the capital, the ADX gained only slightly by 0.3% to close at 2,721 points. The real estate sector was up the most. Alder Properties added 0.8% and Suru Real Estate 2.3%. And Abu Dhabi Islamic Bank was up 1.5%. However, among the few losers was Etisalat, which lost 0.5%, and Abu Dhabi Aviation Company, which fell 0.6%. 55 million shares were traded, valued at 94 million dirhams. And let's now look at the GCC equity markets. The country's main benchmarks ended mainly lower today. And now to our top stories. Emirates NBD kept its title as the largest Arab bank in terms of assets and capital at the end of 2010. That's the fourth year in a row. A new report from Beirut's Union of Arab Banks shows that by the end of last year, Emirates NBD had nearly $78 billion in assets, more than the 470 other commercial banks in the region. The survey also showed that the bank had the largest amount of shareholder equity capital in the Arab banking sector, $9.2 billion. Also, the report added that the UAE remained the largest banking sector in the region, with total assets worth $462 billion at the end of March this year, accounting for nearly a fifth of the Arab banking sector. Gold exports boosted the UAE's non-oil trade by nearly 14% last year. Total non-oil exports in 2010 rose 27% to 83 billion dirhams due to a 37% jump in exports of gold and precious metals, especially to India and Switzerland. That's according to data issued by the UAE's Ministry of Foreign Trade. It also revealed that non-oil trade grew to 754 billion dirhams in 2010, up from 660 billion in 2009. The Ahman Real Estate Regulatory Authority and Ahman Bank today announced a package of products designed to boost the real estate sector in the Emirate. The agreement is the latest output from the ongoing cooperation pact signed between the two organizations late in 2010 to offer real estate financing to end users purchasing properties in Ahman. Through the agreement, Ahman Bank will now offer up to 70% finance to value for select projects registered within the Ahman's regulatory authority. Furthermore, Ahman Bank will reduce arrangement fees for end users purchasing properties in Ahman. And in our fast financial news, Dubai Taxi Corporation recorded an 8% revenue growth in 2010 to reach over 864 million dirhams. Matar Al-Tayyer, the chairman of the board for the RTA, said that net profits rose 11% from 104 million dirhams in 2009 to 115 million last year. He added that over 82 million taxi trips were made last year. The Khalifa Industrial Zone Abu Dhabi and India's Bank of Baroda have signed a global partnership agreement that will allow tenants of the Khalifa Industrial Zone access to the bank's financial services. Bank of Baroda will also aid the zone in attracting foreign direct investments. A fifth of central London's prime real estate is held by Middle Eastern investors. That's according to property investment company IP Global. The company's recent survey stated that this proportion has risen rapidly over the past 12 months, and 60% of all London property deals were made by UAE-based real estate investors. And after the break, we'll run you through what's making the headlines in international business today.